All right, we're going to look at kind of the part of the payoff, at least for doing this whole process and what the benefit is to us. First of all, I want to look at let's look at our balance sheet as of the 30th of March. Now, take a look at this. We see these things as the transactions are occurring. We've looked closely at how it affects our inventory accounts. A couple things are going to happen. One, you're going to understand how much value you have in your company as far as in your inventory. You recognize some of it's finished and finished goods, which is zero right now for us. Some is raw material, which is just what we paid for the material. Some we've added some value to already through our factory overhead, through our direct labor. Now, if you were to take a financial statement to a bank and to get a loan, one, they're going to look at this and they're going to say, first of all, this person knows what he's doing. He's got these separate accounts. He understands how his costs are flowing through his inventory. But also it's going to give a very different value than if you were to simply expense all of your costs as soon as they're incurred. See, the $7,108, that represents money that we've spent. That would show up as a loss, or as a negative rather, on your profit and loss statement, where it actually shouldn't be there. According to generally accepted accounting principles, or GAAP, we're allowed to track these costs as inventory until we actually sell the product. So by doing so, it improves the value, at least the value on paper, of your company, and it's more accurate. Now, we're also going to look at the job profitability summary. Find that by going to Reports, down here to Jobs, and right here at the top, Job Profitability Summary. And this is going to show us the actual costs on a job-by-job basis. And now if this buyer had more than one job, it would list those out as well. And we'd see the total by the customer, as well as we're seeing here the total by the job. In this case, here are the total costs that we accumulated for that job. Here's the revenue that we generated from that job, at least for that job so far. And here's the difference. So we made $1,778. Now this is a good report to look at a bunch of jobs at the same time. Again, as you create multiple jobs and multiple customers, you'll have a longer list here. But there's another report I like, probably even better, just for looking at one job. And that is the profit and loss statement. Now in this case, we know that we only have one job, so this is going to be the same. But what you can do is you can click Modify Report here, Filter, Name, and I would suggest you do this for every job you complete. I wouldn't do it yet for this one because it's not complete, but just as an example. Select the job as the filter and click OK. So every job can have its own profit and loss statement. It has your total sales, your cost of goods sold, and your gross profit on it. It's important, and this is one of the key reasons that we do job costing and this type of cost accounting, is we want to know as detailed as possible which jobs are profitable and which are not, which are more profitable than others and which are not. By looking at each one on a job-by-job basis and not just at the customer level or even department level, we're able to determine what are we doing right and what are we doing wrong. We can look at what we're doing right and duplicate that with other customers. That which we're doing wrong, we can figure out why it's wrong and make changes to correct it. See, if every job that we do is profitable, and if we can improve profitability on every job, then our profitability as a whole company is going to improve as well. So I hope this has been helpful. Again, please leave me comments on what's unclear. I know some of it I went through pretty fast, but I'd love some feedback. Let me know what I can do to improve this and make it better.